Welcome to the Lunch Hour with Mr. Credit.
That's just a straight shooter with upper management written all over him.
And today, it's Thrive Thursday.
Hey guys, you ready to let the dogs out? What? Do what?
Now, get ready because we're giving you the unique insight to help you thrive in a competitive market.
Join us or die.
And now, the Lunch Hour with Mr. Credit on ESPN Radio 1700.
It's down to sound the radio.
Welcome. You are the Lunch Hour with Mr. Credit. This is Ron Greenwald hosting today's show, the July 4th Eve show for Thrive Thursday. And first of all, I certainly want to wish everyone a safe and sane July 4th. I hope you're having fun with family, friends, whomever, and just really be safe out there and have a great time. And we welcome you to the Lunch Hour with Mr. Credit. We have a great show lined up for you today. We hopefully will have a special guest in the second segment of the hour, somebody who, well, I won't give it away. You'll have to stay tuned and listen to find out who it is. Otherwise, you know, why listen? And we also in studio, we have Bruce McPherson with Security One Lending. Bruce is a veteran of home equity conversion mortgages and a phenomenal person to get to know if you are considering or you know someone who wants to stay in their home and is over 62 years of age. A home equity conversion mortgage is somewhat known as a reverse mortgage.
It's the federally created, federally insured reverse mortgage program.
So welcome, Bruce, to the show.
Thank you.
Have any fantastic plans for tomorrow?
No, just taking it easy.
Okay, gonna go see fireworks or
maybe, yeah. My wife and I haven't really decided. We just want, it's been a busy week. We just want to relax.
Lay low.
Yeah.
Sleep. Yeah. 3 days sleep-in weekend is always a good idea.
Sounds pretty good.
Well, welcome. One of the things that Bruce and I are very passionate about is our working with our seniors, and most of the people in the audience may have a parent or grandparent that is considering what to do, can they stay in their home, should they stay in their home, or should they consider selling it and downsizing or moving to one of the senior communities in San Diego. So we really are all about education and the idea of what we call senior stay or go. And if you get on my Twitter handle or feed or whatever you call it, it's hashtag senior stay or go. And Bruce, I understand you have some good announcements about the reverse mortgage industry, so please share those with us.
I sure do. Thanks, Ron. So the federal government, they created this program. They write all the rules. They tell us exactly how much money we can lend, et cetera. And they're doing something that's very positive. They're increasing the amount of money that a new reverse mortgage will provide for people who are around age 68 or older. So you only have to be 62 or older to qualify, but starting in just a few weeks, it'll provide even more money if you're age 68 or older. So if you currently have a reverse mortgage and have been thinking about refinancing to increase the size of your reverse mortgage credit line or increase the size of the monthly payments you receive, et cetera, it's a good idea to give me a call and look into it.
Give us that phone number because we are...
Sure. You can call my cell phone, 619-517-1642. You can even call me over the weekend because I'm just going to be relaxing. I'm not going anywhere. I love helping people. I really
He
don't
really
mind
is an educator first. Then that's what's important because it's not for everybody. And so to clarify what it is if you own a home and you're over the age of 62, and let's say it's worth $500,000, about $250,000 could be available to you for whatever purposes you want. It may be for future health care needs. It may be for remodeling the home so it's safe while you're still living there. So it's not for everybody. You have to really get the family in. You got to hopefully you have an estate planning attorney and you've got all those and a financial advisor all looking at it. What's the best option for you, for your mom and dad, for grandma and grandpa, and some of the younger listeners for great-grandma and grandpa.
Right.
What is the best option for them, for their quality of life? It's not about you, the son, the daughter, the grandchildren. It's about it's about grandma and grandpa.
Right.
So
it's
what
about
else?
their quality of life. And it really is an important decision as far as whether you're going to stay in the home the rest of your retirement or whether you're going to downsize and move. And it makes sense to sit down with specialists like Ron, like you, like me, a financial advisor, an estate planning attorney, and get all the facts before you make a decision. And the facts about reverse mortgages tend to be much more positive than what people think they are, but they're still not the right fit for everyone. So it's important to sit down and discuss your own situation with a specialist. The other bit of news is at the same time that the government is changing the formula to make it more generous for people who are around 68 or older, they're also making the formula even more sensitive to long-term interest rates. One of the things that a lot of people don't know about reverse mortgages is that the higher the long-term interest rates are at the time that you apply for your reverse mortgage, the less money you can get. So right now, long-term rates are very low, so people applying right now are getting the most money possible, the biggest percentage of their home value possible. But now they've made it even more sensitive to long-term rates, things like the 10-year Treasury rate or the 10-year LIBOR rate. Here's an example. Right now, if you're age 62, you could qualify to receive, let's say, to make it an exact example, let's say you wanted to establish a reverse mortgage line of credit. Even if you don't need the money, you just want to get this line of credit for someday because the line of credit actually grows for you, which is an amazing feature. Right now, you could qualify if you're age 62 and exactly age 62, based on current long-term rates, you could get a line of credit that's about 51% of your home's value, up to a home value cap of $625,000. But if, let's say you wait a year, and in that time, long-term rates rise just 1%, and then you finally apply for your reverse mortgage then. The fact that if rates have risen 1%, you will only qualify for a credit line of only 39%, even though you're a year older, which is supposed to help, but higher rates have a much bigger impact than a higher rate. 39%, whereas if you did it today, you could get about 51%.
And again, for those that are under the age of, I'm trying to think of what would be a good cutoff date, 45 to 50, I guess, because I'm 58, and when I went to buy my first home in 1982, and again, if you're driving, just be careful because this is going to shock you. Mortgage rates were around 16 to 18% was your mortgage rate. Now, again, property values were less than they were today, I grant you, but 18%. Mm-hmm. And I was earning in my money market account. I had a money market account earning 14%.
It's amazing.
So it is cyclical. It can happen again, and certainly there's a lot of people that forecast, because we are spending more money than we take in, mm-hmm. that could happen again. So this may be the time to sit down with your advisors and explore these options.
Absolutely. We're talking about rates. Another thing I forgot to mention is we now have another option that you can choose. There's a lot of options when you're setting up a reverse mortgage, and there's a new one where you can, in exchange for a slightly higher variable rate, you can have a much lower lifetime cap on that rate. The lifetime cap used to always be 10 percentage points above the start rate. Right now you could get a rate of about 2.4%, for example. So the lifetime cap would be 12.4%. That's not a great cap, but now there's an option where in exchange for having a rate that's only about maybe 2.7%, you could have a lifetime cap that's only 5 percentage points higher. So say 7.7%. That's really nice to have.
And if you have gotten a mortgage, let's say you bought a home and you went out and got a forward mortgage, not a reverse mortgage, but a regular, quote, regular mortgage, if you want to use that term. There are so many moving parts. It's how, people can quote you any rate they want to. It's all what you're going to pay for that interest rate on a mortgage. So there's a lot, just like anything else, how you structure the reverse mortgage or the forward mortgage or any financing, how you structure it will pay dividends in the long run. So you really need someone, not maybe some of those people that are doing blitzes on television.
Right. Some guy in a call center.
Yeah,
sit down with a professional.
Right. And he'll, like the Excel spreadsheet, go, here's option A, B, C, or D. Mm-hmm. What fits best for you the consumer, the user of the reverse mortgage, not what's best for the person providing you the reverse mortgage. And that's so important. And I think you're having a seminar coming up. Tell us about that.
Yes, I am. It's coming up on, Wednesday, what's the date here? Wednesday, July 23rd. This is for realtors, financial planners, financial advisors, estate planning attorneys, bankers, loan officers, anybody who works with seniors or anybody who's over 62 to educate you about the program. So just give me a call. Again, I'll give you my toll-free number. It's 866-223-7174. That's 866-223-7174, and I'll reserve a seat for you. I did one of these a couple months ago. It was very well received. People learn a lot at these seminars.
And what's also to know is, again, and if you want, let's say you're living here in San Diego and you just got married and you're having young children, and grandma and grandpa live in Minnesota or somewhere it's maybe colder than here in San Diego, and you would love them to come out and be your babysitters for your children, you can use a reverse mortgage for a purchase.
That's right.
So if mom and dad live in Minnesota or someplace in the Midwest, and you always wanted to get them here to California, and they sell the farm, so to speak. I'm picking on Minnesota. I have no idea why, because I usually pick on Illinois, but I'm picking on Minnesota today because it's cold up there in the winter. They can sell the family farm and use some of those proceeds as a down payment on a home here in San Diego, and never have to make a payment while they're living at the home.
Right. Yeah, I don't think we even pointed out yet that the whole biggest benefit of a reverse mortgage is you never, ever have to make monthly payments, ever, as long as you're alive and living there. The interest simply accrues on the loan balance and comes due someday when you're gone.
Right.
So it's really only appropriate for you if you're planning to stay there the rest of your time.
Right.
Except in some unique situations, it could fit other people. But so a lot of people think that you're just trading in your home, and that's not true. It's just a debt that'll come due someday when you're gone. So you can buy a home. You can make payments if you want. It's optional, but the whole idea is to not have to make payments.
So again, as I've always said, and I say it over and over again, and my dear good friend of mine, Paul Greenwood, uses this in his presentations: spend kids' inheritance, SKI, go on a ski vacation, and use that money to buy yourself a home, and then you don't have to make a payment while you're living at the home, and it's called an SKI, spend kids' inheritance.
And in the meantime, your kids are not having to support you. That's the trade-off.
Right.
They won't inherit as much equity as they otherwise would. There might not even be any equity left, but they can never be stuck inheriting a debt instead of inheriting equity. It's guaranteed.
So I hope you live to 108 or 109, and by the time you have passed this earth, that you owe a lot of money.
Right? Yeah. Then you win.
Then you win. Yeah. It's like
you win either way. But
like everything else, it's somewhat a game.
Yep.
So I do invite you to stay tuned for the second segment of the Lunch Hour with Mr. Credit. We have a very special guest calling in. He played for a team here locally, and I want you to meet him. He's a fabulous individual, and he knows somebody that we lost recently, and I want him to share some of those stories of somebody very dear and near to us. Stay tuned.